from the chat box. Can a service company use the VAT input to reduce their VAT output? Well, I said well 3 times because most times you rarely see service companies have input VAT because they are not producing anything. So you rarely see such. Sorry, please give me another 1 minute. I want to do the changeover. All right, back to our conversation. For service companies, you rarely find a situation where they have input VAT because they don't produce anything. Most times, usually very difficult to defend with the tax authorities. But regardless, if you have, well, it's mostly difficult. Let me just leave it at that so I don't go too deep into tax issues again. Now, let's see people who have their hands up. 886-341. I don't know who is 886-341. No.
Yes, good afternoon, Mr. Moderator.
Yep, good afternoon, sir.
Thank you so much for availing us this opportunity.
Yeah.
Although I joined the class late, and I believe this happens to be similar to what you are treating currently happens to be what I have faced in the past.
Okay.
I love it, but I would suggest anytime you want to give us, your students, opportunities like this, I would want to suggest that we should try and let us be in the know on time so that I won't miss the class, because not me in particular, I don't really check my phone often like that.
Okay.
I just stumbled on the message now and it was just like an impromptu thing.
Well,
I just had to rush online, although I've missed a lot, but I want to believe we would have access to the video.
Sure.
So that we can leverage on that.
Sure. Sure.
Okay, thank you so much.
Yeah.
Thank you.
Thank you.
That's all
yeah.
I have to say.
Thank you very much. Somebody here called Glad. You have the microphone. I've given you the microphone. It's not with me again.
Okay, good afternoon, Mr. Moderator.
Yes.
Actually, I did late though. I would want you to explain this cost of sales element again.
Okay.
Cost of sales. Thank you.
Okay, so is there any specific thing? Is it the double entry or what exactly?
Okay, the double entry, the general
Okay.
ledger.
All
yes.
right. Let's take this cost of sale again. Remember what we always say, that when a transaction happens, let me go back to that working this one. When a transaction happens, it always affects elements. When you sell an item to your customer, that item will no longer be yours. It means that your quantity of that item will reduce. That item is usually an asset. That means your asset will reduce.
Reduce, yes.
At the other end, as you are consuming it, it becomes an expense to you because it's no longer valuable. You have given it out. It's no longer for you. So while your asset is reducing, so it's crediting asset, you have to debit a cost because you are using it up. Then you debit expense. That means your expense is increasing because the item is no longer for you. Remember, you spent money on it initially. That money that you spent on it, you have now recovered it by selling it. Therefore, you expense it. Your expense will increase while your asset is reducing. So you debit expense and credit asset. The next question, what is the specific type of expense I'm debiting? Is called, in this context, cost of sales, AGO. What is the particular asset that is affected in this context? It's called inventory, AGO. Madam Glad, I don't know if that was able to help.
Yes.
Great,
Yes.
thank you.
Thank you very much, sir.
All righty. Clement, you have the microphone. After Clement, I will take one or two from the chat box and we move ahead to manage time. Mr. Clement.
So, sorry, I guess that was a mistake. Sorry.
Yeah, your hands are up. I don't know if you wanted to ask a question.
No, I've taken it down. I guess that was a mistake. Sorry.
Oh, it's a no down. No problem.
Yeah, it's a no down. Yeah.
Sadiq Omolewa, I've given you the mic. Oh, is now with you.
Hello, mom.
Oh, interesting. Hello? Yep.
Okay, I understand the transaction you just did, but some transactions doesn't pass through inventory.
It doesn't pass
through inventory.
Through
some
inventory.
transactions don't pass. Yes, that is when you like. Okay, I'm also working with an AGO company.
Okay.
So we just buy products directly from the company and sell it straight to the customer.
Okay.
It doesn't go through inventory. So how do you treat the cost of goods sold?
So let me get it clearly. You you are your company. I deal in AGO. You buy it from me. The AGO is still in my premises, Abby.
We get the truck. There's a truck from your company that sells directly to the company, company and to my customers. I mean,
all right.
Like
so
the vendor straight to the customers.
Oh, like vendor managed inventory. So the customers just go straight to pick your customer. You send your customers to that place to just go and pick product.
No, the vendor go sell directly to the customer. We don't have inventory. We don't keep inventory.
I'm trying to understand.
Okay. Let me explain again.
Please go ahead.
Like we are just like a middleman. This part we are doing it. We have AGO, this thing that we have stations that work with this. You understand? But there are also items that sometimes we don't even have. We don't even take it to our station at all. We just buy directly from the vendor, and the vendor will use his own tank, his own truck directly to the customers. So the cost
in
of
substance
goods
is as if you are sending the customer to the vendor.
Yes.
Like a referrer. Abby?
No, the vendor is the one that supplies the product itself. The customer don't go pick it.
Okay, you refer a customer to a vendor. The vendor can deliver the product to the customer, ba?
Yes.
But last, it is your company that refers the customer to the vendor.
Yes.
So the question is, at what point if anything happens to that inventory now, while they are going to go and deliver it to the customer, who bears the brunt?
It's the vendor.
The vendor. So you are simply just doing a middleman. You are not buying that inventory. So what you just simply take from it is your own commission or something.
Yes.
So there's no need for any inventory because you did not have any inventory in the first place. You debit your commission receivable and you credit your revenue or your income.
Okay. Well, that's not what I was expecting. Because it's supposed to be like the vendor, we credit the vendor and credit the cost of goods sold.
Okay. Okay. Then what of the revenue?
The revenue is the sales and the customer.
So
the revenue is like we debit the revenue and we credit the revenue and debit the customer directly.
So you are taking it that you were the one who sold that inventory to that customer.
Yes.
And you are now taking gross of that revenue. Then how do you charge the VAT? So you also charge VAT on the 100% to that customer. Who sends the invoice to the customer?
We send invoice.
Okay, so if that's the case, so since you send the invoice, I thought it was something that is going to be tripartite, where the three persons have some kind of shared understanding. Deliver it to that guy, collect money from him, then send us our own commission. But anyway, I get your point. If you even do that, the vendor will collect customer from your hand. So you probably don't want to do that. So the entries you propose is actually fine if that's the case.
Okay.
Yeah. If I have any reservation about it, I might still think about it. I'll get back to you. Yep.
Okay.
Let us look from the chat box. One question from the chat box. Okay, yeah, one question and we move. I would like to confirm with this condition, there's no need to purchase in our chart of account, right? No need to have purchases. Well, the inventory stands as purchases. What you post into inventory also contains purchases. For this vendor, at times there's invoice discount. How can you account for that? If the vendor gives you, for example, if the vendor gives you discounts, the question again is which elements will be affected? It simply means that your liability will reduce and the value of your inventory will also have to reduce. So if you thought that your inventory was 20 million before and the guy gave you a discount of 1 million, that means your liability will reduce to 19 million and the value of your inventory will also reduce to 19 million. Maybe because it's a trade discount. You credit your liability and you debit your liability to reduce your liability and you credit your inventory to reduce your inventory cost. WAT everywhere. Whereas his accounting we came to do here, people have scattered everywhere with tax. Oswald said, what if it's not a sale, but you use the inventory as part of your raw material to produce another product? Would the cost of sales be affected after movement in inventory? So if it is a raw material that you purchase, you credit your vendor and you debit your raw material. So I'm aware that as you are now converting that raw material, it will first pass through what they call work in progress. Then from work in progress, it then passes to finished goods. So it's, let me see if I can, within 2 minutes, illustrate this. So initially you bought raw material, you debit raw material with the, whether it's 10 million, you debit your VAT recoverable with the VAT impact of that, and you credit vendor. With all of this, you add something, join the raw material, like you will see when they are producing lubricants. Maybe you add one another ingredient to it. It will move from raw material to work in progress. So now you credit raw material. So it is no longer inside raw material again. It is now inside work in progress. Some other things we join, maybe additives or any other chemicals you add to it to form this work in progress line. Different materials come from different points. Then when you are now done, completed it, you debit work in progress with 10. I'm just assuming 10. And you credit, you debit finished goods and you credit work in progress. So this is how the cycle will look. Most times, because of how plenty the unit you are producing is or the batch you are producing is, this thing is usually done by your ERP. And you will just be there, you will not know that your ERP is doing all these things automatically to save you the stress until the day of problem when you are trying to reconcile one issue or the other. That's when your knowledge of double entry in this area will then be called upon. I've experienced it once or twice. It was an SAP system. It's always passing all these things at the back end until one day something happened. We used to use standard cost. At that time in Nigeria, the time we put the standard cost was quite a while back. Things have moved. Things have become more expensive. So that standard cost could not work again. It now made us go back into the system. We started doing a lot of investigation. If not for the knowledge of double entry, I'm sure we wouldn't have been able to survive that check. Okay. I will just, okay, David, your hands are up. I think your hands have been up for a while now. Let me just take David, then I move to the next phase.
Okay. Good afternoon.
Yep, good afternoon.
My question is actually on the WHT. I don't know if I can go ahead with the question.
Okay, if it is WHT, wait, let me illustrate this and let's see whether you still have the issue.
Okay.
Yep. Thank you.
All right.
Since David's question will likely be resolved, let me pick somebody else. Titi Lokwe Bakari. That name sounds familiar. Titi Lokwe Bakari, you have the mic. Titi Lokwe Bakari. Or is it an old hand? Okay. I'm trying to pick names of people who have not asked questions before. That's why I probably will ignore anyone who has asked question before. Please bear with me. Daniels, Nzubechuku Daniels.
Okay, my concern is this. The first question the lady asked about how if such transaction can be regarded as their inventory. I didn't get what you explained there. So I actually wanted to also throw lights there. Then the second question is this, please. The major issue is valuing the stock at the end of the period. So it's usually a problem. And we have various valuation methods. So now I don't know which is best for the stock to be valued at. And like recently we have a different pump price for different pump price, which this diesel probably must have been bought at, and different invoices. So if I have different prices and I still have some stock left at, that maybe like 2 or 3 prices previously, valuing them. And, if you don't give a specified, I don't know the best valuation method so that you don't affect or give unrealistic profit. Because I know most times some of these things the valuation method or the closing stock valuation affects the profit one way or the other. So which is best for we to value it at? That's just my major question.
So there is no best per se. The two methods are available are first in, first out, and weighted average. For me, I don't think there is a best one, right? At the end of the day, all that cost will still go into the profit or loss account. It's just the timing that will be different, right? So because of that, there is no best per se. If during periods of inflation, you will find a situation where your cost under first in, first out, your cost of sales will be higher as your cost of sales will be lower during the period when the cost is so high because you are taking in old stock first. So overall, don't let us waste more time. There is no best method per se. Just stick to one and be consistent with it. For me, I prefer the weighted average method. I find it more easier and quick to use than the first in, first out. So I prefer the weighted average personally, but that doesn't make it, the best method per se. That's my own input on that.
Okay. And I don't want to drag it much, but the aspect as per best per se is like at least the one that will give a quick glance or near to what the financial position as at that point should be. Like that weighted average, most times if you have a lower price compared to an inflated period, if you take average.
Yes, you take average. Hello?
Hello, can you hear me?
Yes, you got cut off at some point. I'm with you.
Okay, all right. So what I'm saying is this, yes, I know that there might be no best to this, but I'm looking at the one that at least can give us, a quick glance or two that can give a clear define of what the financial position as at that point is. So if, like, for example, I'm taking the weighted average and the last 2, 3, 4 invoices bought were a bit far lower than probably the inflated prices at this period. If I take that weighted average and I'm reporting at a particular period, maybe because the last invoice has not been sold and probably the report is based on the previous invoices sold, but I still have this current stock available, it will really give me my performance as per what I have done based on those previous invoices, except so when maybe in the future.
Huh? We can debate it and we might not land on one spot. Do you know why? Because you are looking at it from the perspective of the balance sheet. Me, I may look at it from the perspective of the POL and say I want something that averages it out because POL is for a period.
In the aspect of P&L, that's where I'm looking at it from. Because I was thinking maybe if it's the aspect of P&L, that's what I'm looking at, not even the balance sheet. Because, most times, some companies use this closing stock to, determine their cost of sales, while some use just direct standard costs to determine their cost to sell. So if that is the case now in the company using this closing stock, that most times might not give me the true picture of what my performance for that period is. That's why I was like, okay, which one do you think is fair enough to define that? Because I'm looking at either standard cost or even the people, not even the weighted average.
Well, that's your perspective. For me, I will just stick with my weighted average. We can have more robust conversation outside of this session anyway.
No problem,
so we don't
okay, no, I don't want to. Then sticking to that other one she said earlier, I didn't really get your judgment on it, that she's talking about, this third party purchase where money is being paid to them. And, I wanted to know your opinion on that.
That was why I put a caveat that I will still look into it, and if I have further reservation, I'll get back. So what she was saying was they sell a GO or white product, as the case may be. Then they instruct vendors to deliver certain quantities to their customers. So the vendor transports it from the what is it called? From their own location, their tank farm or wherever it is, to the customer directly. So to her, which the entry anyway makes sense, pending when I take a look at it for the outside of this session. The debited cost of goods, cost of sales, and credit vendor account, trade payable, to book the value of one or two of such sales transaction, while they book the revenue, as normal. That's how they treat it. So unlike the one we just looked at that passed through inventory, theirs did not pass through inventory because the vendor transfers or transports directly to the customer. I have my reservations, but I don't want to go into it.
Okay, but if I should chip into that, I believe that, not even believe, in the real sense, that should form part of their inventory.
Well, that's why I said I have my reservations. We can always have that conversation outside. I've noted it down. It's an interesting way to structure the transaction.
Yeah, because why I was looking at that is that even the current place I am, I know most times we have intercompany transfers where you can instruct, okay, this company, since we have used similar material, give them, and maybe later you can refund it back. Now, giving them, they've absorbed that particular material into production. If I don't receive it as an inventory, the other company I'm sending it to, if I don't issue it out from here out, and the other company don't receive it as their inventory, you won't be able to track the movement of that. So that's why, irrespective whether the person paid directly or not, or you're giving instruction directly, it is your stock you're still selling. So that should still form your.
So the dynamics, why it's not straightforward. I would have liked to unmute her, but I don't want us to have too much of a debate. Let's say we had very little left to cover. It's an interesting thing that all of us can just, start munching on. But the dynamics of that trade is that if anything happens to that inventory between the vendor and the customer, it's the vendor that bears the brunt. So that's why it's difficult to say the company has inventory.
Okay.
Yeah.
Okay. That aspect, okay. If you look at it from that aspect, yeah, I think she's right.
Yeah. No problem. Thank you very much for the robust conversation. Okay. Yep.
All right.
Ladies and gentlemen, Mr. Adebayo Kazim Sani, I've been seeing your hand since. Let me, you have a question too? Okay, you're the one. You are here. I've been seeing your hands. That what is happening? Have I not answered you? Have I not answered you? All right. So let us go into the next phase. And before we call it an interesting time so far, I wish it was more interesting, but the little we have done is also okay. Because of time, we were not able to engage as much as possible. Let's just do what we can. So the next thing is to receive money from the customer. And we'll also look at paying to the vendor. Let's take a look at that and close out in a couple of minutes.